Good evening, Wizards, and welcome to episode 23 of the Crypto Wizard podcast. Now, we've had a magnificent day in the market so far, in particular for the XRP pair. So before we actually get over to the main topic of this podcast, as always, we'll kickstart this with a little bit of an analytical breakdown on XRP, the market overall, and of course BTC as well, and get a little bit of an understanding until I actually provide a market breakdown into the Telegram group. So starting off, first of all, we have CoinMarketCap with a little refresh right now. The BTC dominance has actually dropped down from around 68.8% today to a little bit of a dip down to the 68.3% region, showing a little bit of a weakening over in the dominance earlier on in the morning, and now slowly shifting over to further weakness where we were pretty much peaking near that 69% region. So we have seen a little bit of a tumble pretty much throughout the day, and now that we've seen XRP surge, it makes pretty solid sense why that is happening right now. Kickstarting with that as well, we've got the BTC pricing for the day around 2% up, Ether around 7% up, and XRP over 9% up for the day, with two phenomenal calls given, not only from the actual drop down to the 25 cents region where your long position should have been executed. In what took around 3 to 4 days, we have actually exploded straight towards and precisely to our first target of the 29.5 cents region. In one solid movement from around 26.5 cents, we've achieved that 29.5 cents region in a magnificent explosion to the upside. Looking at this right now, with the first target achieved, I think the wisest thing to do first of all is actually start considering taking some profits off. This is a very large move to have captured, especially if you guys captured the short down to the 25 cents region as well. It's a very solid move to catch simultaneously, shifting from one move to the other. So looking at this right now, what I'm actually predicting and what I'm actually looking at overall is XRP attempting to push that little bit higher towards 30 to 30.5 cents, even touching 31 cents to retest the overall long-term weekly trend line. The current weekly candle right now, if you can see it, it is actually pushed all the way from around 23.5 cents back up to that 30 cents region, where yet again, week after week, even when we've seen breaks of the 30 cents region, the weekly candle continuously finds its way back up by the end of the week. So although the week hasn't ended yet, I do believe we could be closing the week back at this region, with even the possibility of going to wickfish all the way back down yet again. However, that's something we'll take as it comes, because the overall focus here is the identification of meeting the long-term weekly trend line again. Once we've actually met this trend line, we can actually start to identify from there what could possibly be happening next. Will we reverse even lower and start dipping into the 20 cents region, or will we break above 31 cents, retest this level, and absolutely rocket back towards the 50 cents region? I do anticipate right now the actual upside bias. However, until we hold and maintain this level, we cannot know what to do next until we see some movement. As of now, XRP, after closing at the 29.5 cents region and maintaining below 29.3, I do believe a pullback is pretty much imminent now for the 28.2 region. From here, I believe we'll be gearing up to start tackling the 30 cents region. So overall, it's just a matter of patience right now and really sitting tight and awaiting a pullback to occur first. Once we've seen this fulfill, we can identify further what will be happening next. As for BTC, calling that downside movement, arguably one of the most precise calls I've ever given since CryptoWZRD was started, was the drop down to the $9,500 to $9,600 region, where we retested the overall long-term trend line, where I expected a huge reversal to occur. After spiking down to that 9,600 region, 9,500, we pushed back above $10,000 and we've rocketed towards 10,400. So you should already be in a movement when you already should have seen, even from the push to 10,600, profits of over 1,000 pips in a single trade already. BTC has slightly slowed down in comparison to XRP, which has fulfilled the major bulk of its movement. I do believe BTC can still exceed and tap that $10,800 region and even push towards the $11,000 zone as well. But for the time being, with price lagging behind and the dominance dropping, I do believe the movement is overdue and it should follow through shortly once XRP potentially corrects back down to the 28 cents region. As we start dipping to the lower spectrum of the 28 cent zone, I do believe this would gear up BTC to really rocket higher as well and fulfill that final leg of the movement, where from there we will be doing exactly the same as XRP and dictating whether this will be a movement that can actually exceed towards the upside of 13,500 to 14,000, or if we will be simply retesting 10.8 and even dropping lower back down to the $9,200 region. This is a level which isn't necessarily too promising right now, but it is definitely something I've had in consideration since the very beginning. And if you've watched the Wizard Wednesdays episodes, you would know we have been anticipating this, and there is still a large possibility for this to actually occur. So putting that aside, there will be a breakdown coming through in the Telegram shortly anyway, once we've actually done this podcast. But I wanted to cover the main topic of this specific podcast, and that was a message and a reply I got to one of my posts on my personal Instagram today from a guy called Tariq, who said, what was the hardest thing in trading before you got successful? What did you have to fight with the most? And I actually gave him a very simple answer, and I get it may sound cliche, but emotional balance and stability was always the hardest. I mean, at this point in time, I think the laptop could literally blow up in my face and I'll just make a tea and call it a day. And people often ask me, how have you managed to become so emotionless over the years from trading? And the truth is, you have to endure some of the pain and hardships that come with trading from the very offset. And for me, in the beginning, when I started off around 14, I didn't actually have a real mentor or any real guidance for several years down the line. So for the very first few years, from 14 to maybe 19 years old, I wasn't actually really mentored, guided, or even found any form of real logical sources of information. So unfortunately, unlike the present day where there's, someone like myself can actually help you, there wasn't many people around back in the day. There were many courses and all these things, but none of them were really legit. And Forex back then, only the professionals really knew about trading on a good level. So for me, I had to go in scratch, I had to go in hard, and I had to learn and suffer every single mistake in the book, from endless blown accounts to trying to understand trend lines, trying to understand retest Fibonacci's, and just weaving it out from the very core of the actual trading. I had to start from the absolute basics and go through every single trap and mistake in the book, whether that was signal groups, whether that was algorithms, the AIs, all of that stuff in the beginning. I was trying to go down those routes, and as every single other new trader does, they go down the almost cheating method of trying to identify a quick method to making money, when in reality, it's not that easy when it comes to trading, whether that's Forex, stocks, or crypto. You cannot go down the easy route and expect longevity in the market. That's one of the biggest problems with newcomers in the market. They try to find all of these signal groups or algos or all of this stuff to get a quick fix and make quick profits in the market. But the problem is there is no longevity in this, because not only are you failing to actually master the skill yourself, you are allowing people and other individuals to make those decisions for you who may not actually be as precise and as calculated and as experienced as you may believe. And that's how you end up down a rabbit hole of constantly chasing the next signal group or the next algo. All of this stuff you're consistently chasing, you're trying to find an easy way out. And the brutal truth is, and in all honesty, there is no easy way out in this market. There is no golden ticket. But that is something I'm working on and something I believe I am now achieving when it comes to the Wizard community, as you're probably seeing. But overall, in a nutshell, even with the education, you still have to apply yourself. There is no easy way out. And that's something I didn't really understand in the beginning. I just kept trying to find the golden ticket in the hopes that one day I would find an easy algorithm, an easy system of bot, or anyone else to actually trade for me without actually learning the craft myself. And then over the years, I think the hardest thing to really master from that was realizing that whenever things went wrong, whether that was my account being blown, whether that was me just getting trade after trade wrong, or even having amazing winning streaks, making crazy money, even in the early stages when I started to take bigger risks, only to realize very quickly, even after a winning streak, things could go horribly wrong, and I would even end up in a negative after a serious win streak. Psychologically, that can really affect a human being because they're so used in real life to following systematic procedures. They're so used to following and working a 9 to 5, for example. When you're in a 9 to 5, you know very simply that you go to work, you follow a strict routine, and then when you've come out at the end of the month, you're guaranteed a paycheck as long as you have done your work. The crypto market, to be honest with you, in Forex, unlike other markets or any other place, it's not the same, and it does not follow any principles we're accustomed to in normal life. This means when you are trading in the markets, you may think you're actually doing extremely well, but your results may also say otherwise. And it can be very hard for a human being who's accustomed to the system and society to actually come into an entirely new market where you are not rewarded with instant gratification. You are not guaranteed an income. You're not guaranteed to make money until you've actually mastered a skill. And that's one of the hardest things for me, to actually understand that, and understand that less is always more. And that's one of the main principles of this podcast in particular, that less is always more. And it's something I've really tried to instill into all of you from the very beginning, and especially throughout the present day. You may have noticed the charts, I've stripped them clean even more. They are literally flawless now. You have very few key levels, you have a few trend lines here and there, and maybe a Fibonacci thrown in if need be. When it comes to actually trading in the present day, I have realized now that simplicity is the most simplistic way to achieve success in the trading world. You may have seen from the XRP and BTC calls that I've actually provided over the past few days, it didn't make sense to have all these complicated charts, have all of these algos up, all of these indicators. I don't even have moving averages open anymore. And that's one thing I've always wanted to throw out there as well. Even when I used to use indicators, it was always in a very refined and specific manner. It was never a supplement to the overall price action itself. And we have to realize, when it comes to trading, and when it comes to candlesticks, and when it comes to reading price action, when you are reading price action, what you are essentially looking at here is the human emotions and the rationality and the irrationality of every single human being and robot across the world trading and influencing prices. At the end of the day, the candlesticks are simply a representation of the movements in price. But the movements in price are not moved by one single entity. It's moved by a collective group, whether that's inside the trading with pump and dumps, or if that's just robots. Even if it's robots or algos or whatever it may be pumping and dumping the market, in crypto in particular, we have to realize at the end of the day, it's human beings that have programmed these systems. All of these algorithms, all of these robots, all of these signal groups, for example, or even Wall Street, everything has been constructed and defined by a human being and by human psychology. That specific individual has decided that the algorithm should follow this principle, which means it's based off a human being's psychology. The same goes for banks when they're working in synchronization. That could be the greed, that could be anything, whatever it is collectively, it's a human emotion that is controlling the markets overall. That means when it comes to actually understanding markets and trading, you need to understand human psychology, and you need to understand what's really driving the price. And when you put all of this into perspective and you realize that all of this is actually formed in the formation of candlesticks, you slowly realize that all you need to understand is candlesticks and key levels. Price literally mimics the same patterns every single time. It breaks out from trend lines, it hits Fibonacci levels, and it breaks key levels of support and resistance. That's all you physically need. Whilst moving averages may come through every now and then, whilst price may come and retest them every now and then, to be honest with you, it's absolutely unnecessary to even worry about these, because at the end of the day, moving averages are considered lagging indicators in the first place. That means if you're reading price action, the same way we say buy the rumor and sell the news, the reason being is the price action has already incorporated the news into the price action itself. When you see insider trading, which is heavily present in the crypto and forex market, you know when news comes out, there is normally a pump or a movement before, and then the dump actually occurs once the news goes live. The reason that pump happens before is because of insider trading, which means as an individual who should be able to understand price action in the markets, you do not even need to worry about the news, because no matter what happens with the news, the price will still follow the technicals anyway. So the biggest thing that I really struggled with in the beginning was trying to make things complicated. I was always taught that, the more you have, the easier it is. All of these indicators can help you out here and there. But the truth is, it does the complete opposite, and it's so detrimental to your success. I mean, I cannot stress how much patience, for example, and just understanding candlesticks can drive you to success so much quicker. The more simplistic your charts are, the more easier the price action is to read. As long as you have the key structure, you may remember from one of my old videos where I had almost a house formation set up on a chart. I literally structured the support as the floor, the resistance as the roof, and any intraday levels in between as the stages to a house. And that for me was one of the most crucial ways to actually get my chart set up. And it's changed my life ever since. So in saying that, and in actually answering that question, the emotional side as well was the hardest for me. First of all, patience. I cannot stress the importance of patience, and you know by now, just from following CryptoWZRD or just from following anything I've been doing, you would know that actually every single trade I've taken is based upon the principles of patience. If the setup is not there, I simply will not execute the trade. And the same goes for any other setup I see. A perfect example was XRP. We could have very easily, guys, FOMO'd in and tried to execute at 30 cents to go long. But understanding with a bit of patience and the ability to miss out on opportunities, we were able to save ourselves a crazy amount of money by not being caught in that sharp downside meltdown towards the 25 cents region. And I truly believe right now we could be seeing the same thing occur as everybody starts to take profits around 29.5 cents, as I've kind of guided. Many people would still be trying to enter long right now. And for me, after the bulk of a movement, that does not show patience. All it would mean now, in this current point in time, like XRP, if we start falling back down to around the 28 cents region and retesting this level, we are very likely going to explode higher. But why would you be entering at the very highs when you could very easily wait for a pullback before entering a trade? And this is one of the biggest downfalls of traders. They enter off a large green candle or a large bearish red candle or purple candle, depending on your wizard setup on the charts. And then from there, people execute off a large candle and then realize they've entered at such an insignificant price compared to where key levels of support and resistance are. They end up entering at a bad price. Their stop losses have to be wider and they have to hold much larger swings in the market without realizing they're probably eating into their profits because they were not patient. By simply practicing patience and letting the market come to you, you are allowing the most refined and optimized opportunities and trade executions possible. For example, with BTC, we knew it was going to fall down to 9,500. So why enter at 9,800 where the candle started closing when you know the crucial region of $9,500 is below? Whilst the majority would have entered several $100s higher, we are going for those optimized entries where once you execute, you may not even see a drawdown. So what that means is you can actually minimize your stop loss and enter a much larger position than possible. Because remember, if your stop loss is much smaller than normal, it means your overall position size can be larger. And this was something that took me a long time to realize, where many people think if you're normally trading, let's just say one lot on BTC, but if you get the most precise entry at a premeditated and calculated level, you could actually technically up that to around 3 to 4 lots if you really wanted to. Because if you got one of the most precise entries like we did with BTC, around $9,500, there wasn't a single cent of drawdown after touching that level. That means you could actually almost triple the position size, but also triple reduce your stop loss size. That means the loss amount would actually be exactly the same as you would normally risk, in line with your 1 to 2% principles, but your position size would be so much larger, which means if it does actually become a very refined entry, you would have an incredible profit of almost quadruple or triple what you normally would. This is one of those factors that took me a very long time to realize, where sometimes I'd want to take a bit more risk, maybe 3 to 4% when I wanted to be a bit greedy or make a bit more money, which unfortunately many of you will have to suffer from in the beginning phases. This is a normal principle and part of human psychology when it comes to trading. So I'm actually going to use this good example now as I'm looking at the XRP chart. If I do see this drop back down to 282 to 284, I will very likely be executing again as it starts to fall in line with my analysis once more. And looking at the charts right now, it's looking almost perfect to do so, which could then very easily line us up for a huge explosion back towards the upside. That for me is one of the biggest principles and something I think many people fail to realize. The less you do, the more you actually gain in output. And this is something you need to be focusing on in all aspects of life as well. Sometimes when it comes to the charts in particular, the market can be overly complex. So what's ironic is the less you do, the more you actually start to realize trading is more stress-free, your entries are more refined, and you're actually just sitting there being almost in synchronization with the market 24/7. The toughest thing for me as well was actually just missing out. The fear of missing out was absolutely insane for myself. I would sit there all day long and just look for any movement in the market to execute from, thinking, what if I miss this opportunity? What if I done this? What if I done that? The beauty is with the crypto market, it's 24/7. So you are never missing out on a single opportunity because it's always present. It's moving 24/7. It's volatile. It shifts from liquid to illiquid 24/7, which means the setup will always be present in any given moment. The only reason we go quiet sometimes in the Wizard Telegram is if the entries are not refined enough. Sometimes I do not want to expose you guys to further exposure and risk in the market, so I'll simply stay a bit more quiet in the Telegram, not to aid the potential possibility that you guys will overtrade. And that's one of the most beautiful things that's been happening in the Wizard community so far. Nobody actually worries when I'm not posting in there anymore. It's almost become a kind of mutual agreement that if I'm not posting on that specific day or not posting as aggressively, it's because the market is not providing signs. And if I do start giving analysis during those specific regions, you're more likely to fabricate an actual entry in your head and execute from an opportunity that isn't actually an opportunity. And that is also one of the largest downfalls of new coming traders to the market. They look at any single sign they can find of any formal candlestick formation to execute a trade from. But in reality, there isn't a single opportunity present, and they've entered the trade, which is purely a 50-50 gamble. And if anything, it's actually a 90% risk it will not work out, because you are putting the odds completely against you. By simply using candlestick analysis in line with key levels, and if you structure your charts with very precise key levels, as I've done on mine, and again, if you're following what I've been posting on Telegram, Instagram, Twitter, or on the YouTube videos, for example, or the Wizard Wednesdays, I've literally given you the most precise key levels for both BTC and XRP. And I do truly believe when they actually come through, you can then sit tight with more confidence, execute a trade, and then allow it to roam freely from there. Many people ask me what to do with stop losses, and this is also a crucial thing. Stop loss management is just as crucial as the trade management in itself, and it's arguably the strongest factor in actual trade management overall. When it comes to trading and stop losses, you have to be rapid. They have to be quickly adjusted. You have to be dynamic, you have to improvise, and you have to adapt throughout the day. Every single time a trade explodes in favor of my overall bias, the minute we are in a significant profit of, let's say, several hundred pips, in crypto terms, that's a phenomenal amount. However, it's actually only a little movement to achieve 100 pips, which means all you have to do is sit tight. I'll wait for that to come through and then move your stop losses to break even or into a little bit of profit. The beauty of this is not only is your trade now risk-free, something I heavily promote all over the Wizard platform and the Wizard socials, is because when you have entered the trade and it's now gone into profit, and you're letting it run freely, and you've got your stop loss at break even or in a little bit of profit, you are now officially stress free, and the trade can do whatever it wants. You can go out and enjoy your day, you can go out with your family, you can go out and do whatever your hobbies are without sitting there worrying 24/7 what's going on with the charts. Then alongside that as well, profit taking for me was one of the hardest things to grasp. I never realized, and I could never grasp the concepts of why taking profits was so crucial. Many people want to go for the golden run, the home run trade, spanning several thousands of dollars in BTC, which can be done if you do have the patience to sit there and not worry, and also the capital to handle very large volatile swings in the market. But unfortunately, the way this market works, which is a very good example I'll give you right now, one of the times when BTC rejected around $9,000 to $9,100, it rocketed towards $10,000 to $11,000. So you saw $2,000 in BTC movement in literally a matter of days. People were going crazy. They couldn't wait to see 14,000 next, 16,000 next, and all of these other levels. But guess what happened when BTC hit $11,100? It dropped all the way back down to the entry price of $9,000, where many people would have executed from. Many of these people either wouldn't have taken profit, they wouldn't have put their stop losses into break even, and they would have either been eaten up by the swaps and fees and commissions, because remember, you also need to factor commissions, spreads, and anything else like swaps into your overall trading strategy. Because if you're holding a trade for too long and you're not saturating profits from the market throughout this process, you are literally setting yourself up for further failure, because the reason being is you are eating up into your profits and you have not taken anything out to actually benefit holding that trade through. So one thing I've always realized is when you hit your first key level or you hit one of your first targets, I like to stack my targets up and layer them up. I have take profit target 1 and 2, then anything else from there is a bonus. So I'll always take off 30 to 50% or even 20 to 40% depending on how far the position has moved. If we've seen a huge upside explosion, I'm more likely to take 30 to 50%, then take an extra 20 to 30% off on the final remainder, and then whatever is left, I will let it free roam. But I'm also dynamically adjusting my stop losses throughout this entire process to ensure I'm never really left in a loss. My whole goal here is to execute trades, put the stop loss into break even straight away, and ensure yet again another trade is risk free. Because at the end of the day, anything can go wrong at any given moment, and if you are at least closing the trades at break even, you are not eating into your account capital. Whereas if you're leaving these trades open, trying to catch one golden run of trying to flip $1,000 to, let's just say, $10,000 in a single trade, you're more likely to experience emotional and very drastic volatile swings in the market, in particular in the cryptocurrency market. So it's just not wise. And again, greed will never get you far in this market. It's always better to actually, let's just say you have $1,000 and you grow the account to $1,500. It is actually wiser sometimes to even take out $300 from that trade, increase your balance to $1,300, and then let the rest ride. And then for all you know, you've now got a risk-free trade, you've also secured profit, and anything else that happens from there onwards, you're guaranteed to profit on top anyway. So it's a bonus and a win-win regardless. So I'm going to leave you guys on that note and something to consider, especially as I continue in a minute with some more analysis videos in the Telegram. I'll be providing some more updates as well. And as we start progressing towards the launch of the Wizard platform, I need you guys in tip-top shape and understanding these key principles. And I believe the best way to get you there is to spoon feed you absolutely everything that will slowly instill into your subconscious and actually better you all as traders. I really cannot wait to see how the remainder of this week ends up. All I know is we've ended the week on a phenomenal note with a crazy amount of profits made collectively. One guy alone sent me $55,000 in profit off a single XRP trade that was given at 25 cents. He showed me $55,000 profit when price hit 27 cents. So I can only imagine how much he's actually made now it's hit 29.5 cents. So all I know is he's probably almost at the six-figure region off a single trade alone. And this is something I want to instill into all of you, that it's absolutely possible and anything can be achieved if you can put your mind to it.